What if the single decision you make today buys back the next 30 years of your life? Not a stock pick, not a side hustle, a switch from consumer to owner, permanently. Here's the truth no one teaches in school. Your future changes the moment you decide to become an investor first, spender second. Pick a percentage of every dollar you earn, route it to your freedom fund, and make it automatic so it happens whether you feel like it or not. That's the most important money decision you'll ever make. Because automation beats intention and ownership beats effort. Step 1. Start embarrassingly small if you have to. 1%, 2%, 5%. The amount will grow. The identity starts now. The goal is to cross the line where saving is no longer a struggle. It's just what happens. Set up a separate account you don't touch, nickname it, and schedule the draft for the day after payday. When income rises, nudge the percentage higher. If your employer offers a match, take it. If they offer a save more tomorrow option, enroll so your contribution auto-steps up each year without willpower. This isn't about perfection. It's about a machine that pays your future self on schedule. Why does this single move matter so much? Because you've been playing a game without knowing the rules. The financial world is noisy on purpose. Complexity keeps most people on the sidelines. You cut through it by deciding, once, to buy your freedom before you buy anything else. From that point forward, your life runs on a different algorithm. A piece of every paycheck becomes ownership of productive assets, compounding while you sleep. That's how ordinary earners become extraordinary owners. Maybe you've tried to get serious before. Budgets, apps, even a hot tip from a friend. But plans that rely on mood die when life gets loud. Automation is anti-fragile. It keeps working through busy seasons, bad days, and good excuses. Decide the percentage, lock the draft, and let time do what talent can't. If your brain's asking, how much is enough? You're thinking like a pro already. We'll make the game winnable by putting numbers to your dream and building a simple roadmap. But step 1 isn't math, it's identity. Say it out loud. I am an investor. Then prove it with the next dollar you touch. Here's your 5-minute start. Open a separate, boring, no temptation account for your freedom fund. Set an auto transfer for the day after payday. Even $10 flips the switch. Write the percentage you'll commit this month and the date you'll raise it. Tell one person you trust. Quiet accountability beats loud intentions. From here, we'll unfold the 7 simple steps. How to avoid the industry's traps. Put a price tag on your dreams. Allocate your money like the pros. And build lifetime income with downside protection. But none of it works without this first decision. Make it once. Make it automatic. Then let the game tilt in your favor. What if you're doing everything right and the game is still rigged against you? The leak is invisible. It's the quiet 1% here, 0.75% there. Fees that skim your compounding for decades. A single percentage point sounds harmless. Over 30 years, it can cost you 1/3 of your future. Compounding works both ways. For you, or for the middlemen. There's a second trap. Advice that isn't on your side. Ask one question in writing. Are you a fiduciary at all times? If the answer isn't yes, you're in a sales channel. Good people can work in that channel, but incentives matter. You deserve advice that puts your interests first every minute. And that glossy average return your fund boasts. Averages lie. Lose 50% one year and gain 50% the next, and your average is 0. Yet your money is still down. Timing and volatility drag real results below the billboard number. Your defense is boring and powerful. Low cost, broadly diversified funds, added automatically through every market mood. Taxes take bites too. High turnover funds throw off taxable distributions. Keep tax-inefficient assets inside retirement accounts when you can. Hold tax-efficient index funds in taxable accounts, and let time do the heavy lifting. Rebalance on a calendar, not on a headline. Step 2. Open your 401k or workplace plan and audit it like an owner. Take the full company match. Free money comes first. Then pick the cheapest broad index options you can find. Skip shiny managed funds unless the numbers are undeniable. Simplicity isn't a lack of sophistication. It's a refusal to pay for noise. Build a sleep-well allocation you can hold in storms, a total market fund, an international sleeve, a measured bond position to blunt shocks. Set your mix once, automate contributions, and rebalance once a year. If you can't stick with an allocation in a bad month, it isn't your allocation. Install behavioral guardrails. Decide now that you won't sell just because a headline screams. Replace doom scrolling with a once-a-year portfolio check. If you feel the itch to tinker, change contributions, not holdings. Keep your identity simple. I buy the market every payday, no matter what. Make this real today. Ask for your all-in fees in writing. Advice, fund expenses, platform costs, everything. Get confirmation of fiduciary status in writing. List every fund you own and its expense ratio. Swap expensive duplicates for low-cost indexes. Turn on automatic contributions and calendar a yearly rebalance. Step 1 made you an investor by identity. This step keeps the industry from quietly renting your future. Seal the leaks, remove conflicts, simplify the portfolio, and your results begin to look like the promise on the brochure, without the drama. Next, we'll make the game winnable by putting a price tag on your dreams. You'll calculate in minutes the number that buys security, the number that buys independence, and the path that gets you there on time. What if freedom isn't a fantasy? It's a price tag you can read today. What if your number isn't your salary, but the amount that buys back your time? And what if you could see it in the next 3 minutes? Start lean. List only what keeps life running. Housing, food at home, utilities, basic transport, insurance, bare-bones healthcare. Add it up for 1 month. That's your core. Multiply that monthly core by 12 to get a year, then by roughly 25 to estimate the nest egg that could cover it forever. If you prefer monthly math, multiply your core by 300. That's your security number, the point where essentials are on autopilot. Now lift your eyes. What does a life you actually want cost? Keep the core. Add the modest upgrades you'd keep even if you were already free. Date nights, a simple trip, the hobbies that keep you human. That monthly total times 300 is your independence number. Not yachts, not flex. Just a life you'd be proud to live on purpose. One more layer. The dream line. Price the big goals without blushing. Sabbaticals, a cabin, a cause you'll fund until it doesn't need you. Break each into a monthly bite. Add it to independence. Multiply by 300. That's your freedom number. Does it feel big? Good. Big tells the truth. Small lies feel safe and steal decades. Here's the twist you've never been taught. You don't have to fund the end state before you feel free. Every rung matters. When security is covered, your stress drops. When independence is covered, your options explode. When freedom is covered, you work because you want to. Close the gap with a ruler, not a guess. Write 2 figures. what your money grows by each month, and what it needs to grow by to hit your next rung by a date you choose. The difference is your monthly freedom contribution. Automate it the day after payday. When income rises, raise the draft. When a bill dies, redirect the payment to your future. You are turning time into ownership on a schedule. Where will the growth come from? From a simple, boring mix you can hold through storms, contributions that never miss a paycheck, and fees so low they can't eat your compounding. From now on, the question isn't, can I afford this? It's, does this delay my next rung? If the answer is yes, you already know what to do. 3 checkpoints to keep you honest. First, could you make core smaller for a season to reach security faster? Second, if markets went nowhere for 3 years, would you keep contributing anyway? Third, if you woke up already at independence, what would you do differently this week? And why wait? Step 3. Put the numbers where you can't ignore them. A sticky note on your screen with core, independence, freedom. A weekly 2-minute glance at your tracker. A calendar reminder on the same day every month. Raise it by 1%. Progress you can see is progress you'll defend. You just made the game winnable. Clear targets, automatic funding, a date with your future written in ink. Next, you'll learn how to allocate your money so downside doesn't blow up your plan and upside doesn't require luck. How to build a portfolio you can sleep with when headlines scream. Step 4. Build a portfolio you can sleep with. What if you could lose less in bad years and still win over decades? What if the fastest way to grow your money was to protect it first? What if one decision today could cut your market anxiety in half? Stop thinking in picks. Start thinking in environments. Economies cycle through rising, falling growth and rising, falling inflation. No single asset wins everywhere. The game is to own a mix that can live through all 4 seasons, so you don't have to guess the weather. Use 3 simple buckets. Security bucket, money that must be there when you need it. Cash for short-term needs, high-quality bonds for ballast, and your full emergency fund. Purpose, sleep. Growth bucket, owners, not lenders. Broad global stocks, low-cost index funds, some real estate or small business exposure if it fits your life. Purpose, long-term compounding. Dream bucket, the life you're building toward. A sabbatical, a cabin, a cause. Naming this prevents accidental splurges that derail your plan. Purpose, motivation you can see. Within the security and growth buckets, diversify by driver, not by logo. You want pieces that respond differently when the world changes. Assets that like rising growth, equities. Assets that like falling growth, high-quality bonds. Assets that like rising inflation, commodities, real assets. Assets that like falling inflation, longer duration bonds. You're not trying to predict the next regime. You're preparing for all of them. Set your risk dial before the storm, not during it. Pick a maximum drawdown you can stomach. For example, I will tolerate a temporary decline of up to X% without selling. If your mix can drop more than that in history, turn the dial down. More ballast, less sale. Write 4 rules on 1 page and follow them on autopilot. Automatic contributions every payday into your chosen mix. Annual rebalance back to targets. Sell what ran hot, add to what lagged. Tax placement. Keep tax-inefficient pieces in retirement accounts when you can. Hold tax-efficient index funds in taxable. No headline trades. You adjust on a calendar, not on Twitter. Keep costs microscopic. Expenses are the one forecast that always comes true. Favor low-cost index funds, ETFs, for the core. If you use an advisor, get fiduciary status in writing and know your all-in fee. Sanity checks that save portfolios. If you couldn't hold this mix through last decade's worst year, it isn't your mix. If your plan only works in sunshine, it isn't a plan. If you feel the itch to tinker, change contributions, not positions. Make it real in 15 minutes. Choose target percentages for security, growth, and dream. Choose 2 to 4 low-cost funds that cover global stocks, quality bonds, and an inflation hedge. Turn on automatic drafts. Add a yearly rebalance reminder to your calendar. Done beats dazzling. You don't need perfect timing to reach freedom. You need a portfolio that survives the bad and participates in the good, quietly, automatically, relentlessly. Next, we'll turn assets into paychecks for life. How to lock in income you can't outlive while keeping growth working in the background. Step 5. Turn your portfolio into paychecks. Without losing sleep. What if your money could pay you every month? No boss, no invoices, no guessing. What if those paychecks kept coming even when markets sulk? And what if you could lock in essentials and leave room for upside? Start by drawing a line down a page. Floor on the left, future on the right. The floor. This is income you can count on through every season. List your core bills: housing, food at home, utilities, transport, insurance. Now cover that number with sources that don't flinch. Social Security optimized, any pension, and, for a slice of your savings, a simple lifetime annuity you understand. One clean option: a plain vanilla immediate annuity that starts paying now or at a date you choose. You're swapping a portion of principal for a check that arrives every month, rain or shine. The goal isn't to annuitize everything. It's to bulletproof the basics, so you never sell stocks to buy groceries in a down year. The future. Everything above the floor stays invested to grow, raise your income over time, and fund the life you want. Keep the security, growth, dream buckets from part 4, and let automatic contributions and annual rebalancing do the heavy lifting. Sequence risk, the danger of bad returns early in retirement, gets 3 defenses. Cash buffer, keep 12 to 24 months of spending above your floor in cash-like reserves so you aren't forced to sell at a low. Guardrails withdrawals. Start with a sensible withdrawal rate, then adjust by small percentages each year based on portfolio health. Give yourself a raise after strong years. Tighten a notch after weak ones. Flexible spending. Pre-decide what can scale back for a season, travel, upgrades, so your essentials never wobble. Give yourself raises on purpose. Tie discretionary withdrawals to a moving average of portfolio value or to dividend interest income, and review yearly. Keep an eye on inflation. Own assets with built-in inflation defense. Broad equities, inflation-linked bonds, real assets, so your lifestyle doesn't shrink as prices rise. Taxes are part of the game plan, not an afterthought. Sequence withdrawals to minimize the bill. Usually taxable accounts first, harvesting gains strategically, then tax-deferred, with Roth last for maximum flexibility. Keep high turnover or interest-heavy holdings in tax-advantaged accounts when you can. If you love clarity, write a one-page income policy. My monthly floor target: dollars, sources, Social Security, pension, annuity. My cash buffer: months. My starting withdrawal rate from investments: gas 1%. My guardrails, annual raise cut by %, if portfolio crosses set bands. My rebalance month, reduced. What I'll cut first in a storm, nach months. This page is your calm voice when headlines get loud. Make it real this week. Price your floor and list the sources that cover it. If there's a gap, decide whether to fill it with a small annuity slice or a larger cash buffer. Move a year of discretionary spending into your cash bucket if you're already drawing. Automate a yearly pay raise review on your calendar, same month, every year. Write and sign your income policy. Tape it inside your money folder. You don't need to predict markets to live well. You need essentials guaranteed, a buffer for storms, rules you'll actually follow, and growth that keeps working in the background. That's how portfolios become paychecks, and paychecks become peace. Next, we'll borrow the playbooks of world-class investors, how they think about risk, costs, and simplicity, so you can model what works without copying what won't. Step 6. Steal the rules, not the trades. What if the world's best investors already solved 90% of your problems? What if you could copy their rules without copying a single trade? And what if the real edge isn't IQ? It's discipline you can automate. The first rule they agree on: protect the downside. If you don't blow up, compounding has time to work. Define the loss you can live through before the storm, not during it. If a position can drop more than you can stomach, it's not a position, it's a problem. Cash isn't laziness, it's optionality. They also agree on humility. Prediction is entertainment, process is money. Asset allocation beats stock picking over time. Own broad, low-cost exposure to the engines of growth. Diversify by what drives returns, growth and inflation. And set the mix to survive bad years you'll definitely face. Costs are the one forecast that always comes true. A quiet 1% fee can erase years of freedom. Keep expenses microscopic, turnover low, and taxes minimized. There's nothing elite about tipping Wall Street every month. Asymmetry matters. Cap the downside, leave the upside uncapped. That's why you pair ballast, quality bonds, cash equivalents, with sale, global stocks, real assets. Rebalance on a calendar, and let winners run without letting them sink you if they reverse. Position sizing is strategy in disguise. If it can keep you up at night, it's too big. Put your largest dollars in the broadest, lowest cost vehicles. If you want a satellite idea, size it so a mistake is a bruise, not a broken bone. They write rules they can follow under pressure. Automatic contributions every payday. Annual rebalance back to targets, no excuses. No headline trades, adjustments by calendar only. A max drawdown line in ink. A never list. Never borrow to invest, never chase what just doubled, never concentrate in a single story. They rehearse the pain in advance. Before you need it, decide what you'll cut first in a crash. Travel, upgrades. So you never sell your future to fund your present. Pre-commit to stay invested through a set drop. If the bear shows up, you're executing a plan, not negotiating with fear. They keep a cash buffer to avoid forced selling. 12 to 24 months for retirees above the guaranteed floor. A smaller buffer for accumulators to seize opportunities instead of watching them. They keep score the way pros do. Not by the latest headline, but by your plan's goals. Are contributions on schedule? Are costs low? Did you rebalance? Is your drawdown within the line you chose? If yes, you're winning, even when the market is noisy. Make it real today. Write a one-page rule sheet. List your target mix, your max drawdown, your rebalance month, your never list, and what you'll cut first in a storm. Set a recurring calendar invite titled Follow the Rules. Move one opinion you've been debating into a tiny, size test. Or delete it and raise your contribution instead. Ask yourself 3 hard questions and answer them in ink. If this fell 30%, would I add or bail? If this position vanished tomorrow, would my life change? If I couldn't check prices for a year, would this portfolio still make sense? You don't need access, hot tips, or a crystal ball. You need rules that survive your mood, costs you barely feel, and a mix that wins by not losing big. That's how the masters stay masters, and how your plan keeps paying you long after the noise forgets your name. Next, we finish the journey. You'll stitch everything together into a simple, repeatable 7-step playbook with daily moves you can run in under 10 minutes. And the single sentence that keeps you from ever drifting back. Step 7. The one-page freedom plan. What if financial freedom could live on a single page? What if 10 minutes a week could keep you on track? What if one sentence could stop you from ever drifting back? Here's the whole game, stitched tight. Step 1, identity first. Decide once. You're an owner, not just a consumer. Automate a percentage of every paycheck into your freedom fund the day after payday. Start small if you must. Raise it every raise. Step 2, seal the leaks. Know your all-in fees, keep them microscopic, and demand fiduciary advice in writing. Prefer broad, low-cost index funds. Complexity is a toll. Skip it. Step 3, put a price on your life. Write 3 numbers. Security, essentials only. Independence, the life you actually want. And freedom, big dreams, priced honestly. Multiply each monthly figure by 300 to see the nest egg that funds it. Aim for the next rung first. Automate the gap. Step 4. Build for every season. Split money into security, growth, and dream buckets. Diversify by what drives returns. Growth and inflation, not by logo. Set your risk dial before storms. Costs low, turnover low, nerves steady. Step 5. Turn assets into income. Cover your essentials with guaranteed or near guaranteed sources. Social Security optimized. Any pension, maybe a plain annuity slice. So you never sell stocks to buy groceries. Keep a cash buffer for rough patches. Use simple guardrails to adjust withdrawals up or down each year. Step 6. Write rules you can obey under stress. Automatic contributions, annual rebalance, no headline trades, a max drawdown you'll ride through, a never list, never borrow to invest, never chase what just doubled, never let one position keep you up at night. Step 7. Run the cadence. Today, open or rename your Freedom account, schedule the draft, list your 3 numbers. Each payday, contributions hit automatically, hands off. Weekly, 10 minutes. Scan balances, pay bills, note one small improvement, cancel, negotiate, sell. No trading. Monthly, zero-based plan. Raise your savings rate by 1% if cash flow allows. Quarterly, fee check, contribution check, drift check. Yearly, rebalance to targets, review taxes and income policy. Reprice your 3 numbers and celebrate in ways that don't add payments. If you love clarity, put it all on one sheet. Your percentages, funds, fees, drawdown line, rebalance month, 3 numbers, and the first expenses you'll cut in a storm. Tape it where future you can't ignore it. When noise rises, you're not guessing. you're executing. Remember the arc you built. You chose ownership over impulse. You kept more by paying less. You priced security, independence, and freedom. You built an all-weather portfolio. You turned assets into paychecks. You adopted the rules of the masters. And you installed a rhythm that compounds without your mood's permission. If you forget everything else, keep this sentence. Pay your future self first, automatically, and live on the rest. Do that with low costs, broad diversification, and stubborn consistency. And time will do what talent and timing rarely can. You don't need a perfect forecast. You need a simple plan you'll actually follow, a calendar that enforces it, and the courage to stay boring while your life gets extraordinary.